Hello, hello! Today's Thursday, December 5th, 2024. I am Jason Shapiro with crowdedmarketreport.com. So today was clearly not a great day for risk assets. The stock market did make new highs in the S&P and the NASDAQ intraday and then failed off of those. I think that the worst reversal days are the ones that do that start down, go up into midday and then fail. That's what happened today. Does that mean the market's going to crash? No, but just an interesting observation. I will say something that nobody wants to say and nobody wants to hear, which is I don't think from now, at least until year end, is a great time to be aggressively long risk assets. Okay? I understand it's a bull market. We hit new all-time highs today in the stock market, but it just doesn't feel right to me. It starts getting too easy, and when it gets too easy is when it really is going to start getting hard usually. Doesn't mean the market has to go down. Doesn't mean the market can't go up. The market can go up. The market was on new all-time highs today. It can go up. It usually goes up. I just don't think personally from a risk-reward point of view, this is a great time to be long risk assets. Okay? It seems to me the consensus is that the market is going to go up until year end, Christmas rally, etc., and then go down in January. Well, who in their right mind is going to buy it into Christmas if they think it's going to go down into January? Wouldn't you be selling it if you think it's going to go down in January? You can get in front of that. I think you would. Don't know if any of that's going to happen, but it just doesn't feel to me here like a great risk-reward trade. And today may have been the start of it. I don't know. Certainly, I don't know why the stock market went down today, but again, the market down one day is not the end of the world. Market goes down, has down days and up markets. But again, risk reward from me personally for the way I trade, I don't think this is a great place. The way you want to be long is when everybody hates it. Recessions are coming, all that stuff. We're not there anymore. That's all been given up, okay? It's all just a question of how high it could go now, which again, it could go higher. But from a risk reward point of view, again, I don't like it. From a psychology point of view, I don't like it here. I just don't. I think that one important chart in the stock market here is this Russell versus the NASDAQ chart. And there's been an important, what I consider to be an important point in the markets here, which is where the markets closed the day before the election, because the election sort of changed everything, especially the way that it went down. And I think that if the market were to lose that, that could be a sign of a problem. What has lost that is the Russell over NASDAQ. And the Russell was seen as the big beneficiary when Trump won, because it's seen as, domestic, and, they're going to bring the jobs back to America, and they're going to put tariffs, and that's going to protect American companies, and that's supposed to be very helpful to smaller companies that are in the Russell. Well, today, the Russell took out that entire gain, which means you have a lot of people that put that trade on that are now trapped long in that trade, and that is usually a problem. So something to watch out for that I think is somewhat of a bearish sign is this Russell versus NASDAQ taking out the entire post-election rally. And the other interesting thing today clearly was Bitcoin, which had this big reversal day candle type of thing. Is that the all-time high for Bitcoin? It broke through 100,000, then it failed. Hard to say. I think it's interesting that with Bitcoin hitting a new all-time high today, MSTR is 20% off its all-time high. And I've talked before that might be the first sign as to when this stops, is when MSTR starts to underperform, and it's now been underperforming for a couple weeks. Down 20% is not a small amount, in particular with Bitcoin at new all-time highs. A little danger sign there as well. The only other thing worth talking about, I think, today is the currencies, where the euro closed on highs, and people have been hating on the euro as the economies in Europe have gotten worse, as the political situations in a lot of European countries have gotten worse, and yet here we are with the euro on 2-week highs. Okay, the dollar's on 2-week lows, right? Swiss franc also on 2-week highs, breaking above these levels, right? I think that's interesting. Even the Canadian's a little weak, but it's okay. British pound, though, another European currency, breaking through this level, right? making a new 2-week high off the lows. This is in the midst of bad economic data that continues to come out there, and bad political data. I think that's very interesting, because clearly the love for the dollar has gotten a little bit out of control here. Other than that, you know, bonds just really did nothing today. They came off, they went up, you know what I mean? Energies really didn't do very much, you know. There was some OPEC news and whatever. It came off, went up, ended up flat. Even natural gas, which I'm biased towards, did close up on the day, but a very small amount. There was some negative news on natural gas today. An inventory number that came out was negative, and it still managed to close up on the day. But having said that, it was stronger when the news came out, which was here. News came out, went down on the bad news, made a new high, then came off and kind of closed lower than where it was when the news came out. So I don't think there's anything big there. I don't know what's going on with this trade. It's sort of a nightmare. Slightly in the money on it, but like I always say, it's either going to get stopped or it'll work, and I'm pretty okay with it either way. I prefer it to be the good side, but if it gets stopped, it gets stopped. It happens all the time. The important thing with that is to just maintain the discipline and take the stop if it hits. And that was really it. You know, the metals, it's just up and down. You know, they're really not doing a whole hell of a lot here. They're just churning around. I don't really think there's a lot of opportunity there. Gold, same thing. It's just kind of churning around. You know, it really hasn't gone anywhere in a few months now. You know, this is going all the way back to mid-September. It's 3 months. Hasn't really gone anywhere. Don't really think there's a lot to do there on either side, and it's proving out to be the case because it's really doing nothing. Okay, so the main focus really is the stock market, which I believe, like I say, has gotten a little bit slightly out of control here, where it seems like the money is just too easy. So I'm not a player there, and Bitcoin, of course, which is the center of the universe at this point. The reversal day today, you know, on the back of some good news about the SEC and appointee and all that, might be a warning sign there. And the dollar, you know, which doesn't look very good here. Okay, after there being some sort of euphoric bullishness and people calling for the euro to go to parity just a couple weeks ago, and all of a sudden the euro's on 2-week highs out of nowhere on the back of nothing but bad news. I think those are the main things to be monitoring here. Okay, so those are my thoughts for today on this Thursday. Tomorrow, of course, we have a employment number, which historically is a market mover, although is it really a market mover now? I think things have shifted until the new administration comes in, but let's just see how it goes. And that's it. Please like the video if you like it. Please check us out on Crowded Market Report. Check out our free Substack. Check out our YouTube, which you already are doing right now. And we will talk again soon. All right, I hope that helps, and I hope everybody's doing well out there. Thank you.